Are we witnessing the dawn of a new era in cryptocurrency?
Absolutely. Today we dive into insights from experts on potential market shifts.
And the best part? We've condensed all the essential information into bite-sized takeaways.
That's right. Discover the explosive predictions for Bitcoin and why you should care.
At Financial Insights in Minutes, we aim to provide quick, valuable information.
Stay tuned as we explore how U.S. regulations could impact stablecoins like Tether.
But first, we'll dive into George Tung's analysis on Bitcoin's trajectory near 100K. Today's discussion revolves around the potential for XRP to flip Bitcoin soon. Fascinating, right?
Definitely. The video delves into how XRP might pull it off.
What's the core argument here?
The speaker believes XRP will gain market dominance over Bitcoin, not market cap.
That's an interesting distinction. Why does he think that?
He cites XRP's previous performance during bull runs and predicts similar dynamics.
How does history play into XRP's current situation?
It has seen major highs and lows, especially affected by regulatory issues.
So the timing of the next bull run could be pivotal.
Exactly. Historical trends suggest potential for significant gains.
What about institutional interest in XRP?
It's becoming a focal point for institutional investment, which could drive its price.
Interesting. How does this relate to Ethereum?
Ethereum is being viewed more as a stable institutional play, while XRP could lead the retail sector.
So what's the prediction regarding Bitcoin dominance?
XRP might eat into Bitcoin's market dominance rather than its market cap.
When should investors look out for these changes?
Key moments are anticipated between Thanksgiving and early December.
What are the specific predictions made?
He speculates that XRP's dominance could increase significantly in the coming months.
So, is it a good time for investors to reevaluate?
For sure, monitoring market trends could lead to profitable decisions.
What's the main takeaway for investors?
Watch XRP closely as it could reshape investment strategies.
Sounds like an exciting time in crypto.
Absolutely, the dynamics are shifting fast.
Today, let's unpack George Tung's insights on Bitcoin's staggering rise.
It's astounding to see Bitcoin nearing $100,000. That's a massive psychological barrier.
What's the main argument here regarding retail investors?
George suggests that the current trajectory of Bitcoin might limit future buying opportunities for retail investors.
So are we talking about a potential missed opportunity?
Exactly, with institutions scooping it up, retail investors could face higher entry prices.
Can you break down Bitcoin's price movements this past week?
Sure, it recently peaked at almost $100,000, a critical psychological level.
What does this signify for investors?
It suggests heightened interest and potential future volatility ahead.
Speaking of institutions, how are they impacting the market?
Institutional investors are leading the charge, significantly driving demand for Bitcoin.
Is this changing how retail investors should approach Bitcoin?
Yes, the scarcity driven by institutional demand could complicate retail acquisitions.
George mentioned replacing traditional bond allocations with Bitcoin. What do you think?
His analysis shows this could dramatically enhance portfolio returns.
How significant is that investment shift?
Very significant. It offers potential for greater wealth accumulation.
What do experts forecast for Bitcoin's future prices?
Predictions suggest it could soar past $180,000 next year.
What factors are driving these optimistic forecasts?
Increasing institutional adoption and government backing are game changers.
So, what's the bottom line for investors watching Bitcoin?
Stay informed and adjust your strategies. Bitcoin is here to stay.
Isn't it about time to get serious about digital assets?
Absolutely. They're becoming integral to future investing.
Sheldon discussed the recent surge in Bitcoin values and its impact on altcoins.
He highlights the importance of preparing for an altcoin rally, emphasizing patience and strategy.
What's the core idea Sheldon is presenting about altcoins?
He predicts that as Bitcoin stabilizes, altcoins will rapidly catch up.
What indicators suggest this rally?
Traders are noting a bullish sentiment in the altcoin markets.
How is Bitcoin performing right now?
It's hitting new highs, but sideways movement is anticipated.
What should investors focus on regarding altcoins?
They should place limit orders and buy patiently in key zones.
What psychological strategies does Sheldon recommend?
He stresses the importance of remaining calm and avoiding emotional decisions.
What are Sheldon's predictions for the altcoin market?
He expects a significant altcoin rally soon, fueled by Bitcoin stabilization.
What should investors take away from Sheldon's insights?
Prepare and trade strategically to capitalize on upcoming market trends.
Let's jump into today's discussion on Bitcoin's explosive price movement.
Absolutely, the market sentiment is electric right now.
What are the key drivers for Bitcoin's price surge?
The election results and a pro-crypto stance have sparked huge investor interest.
How do the elections affect crypto regulations?
They create a more favorable climate for cryptocurrencies.
What are the numbers saying about Bitcoin right now?
With inflows surging, a price target of $100 seems plausible.
What's your take on Bitcoin's trajectory?
It's likely to gain further traction as traditional finance integrates with crypto.
What targets should we look for in the near future?
Analysts suggest Bitcoin could hit $100K in the next few months.
What's the main takeaway for investors today?
Be proactive and adaptive. The Bitcoin landscape is shifting rapidly.
In this segment, we're examining the push against stablecoins by U.S. regulators, particularly the spotlight on Tether.
The implications are staggering. If sanctions hit, it could send shockwaves through the crypto market.
So what's at stake with the scrutiny on Tether?
Sanctioning them could trigger a massive sell-off of U.S. bonds, destabilizing the entire financial system.
That sounds like a nightmare scenario.
Exactly. It's a delicate balance between regulation and market stability.
How do stablecoins connect with U.S. bonds?
They're underpinned by U.S. Treasury securities, creating a web of financial obligations.
And that creates risks if they're forced to liquidate.
Absolutely. Liquidation could destabilize both the bond market and the financial system.
What drives the government's unease with stablecoins?
Their unpredictable nature poses systemic risks. They're essentially unauthorized money.
Could this lead to stricter regulations?
Potentially, yes. Regulators might see a crisis as an opportunity to push for CBDCs.
Could CBDCs really see an impact on stablecoins?
Definitely. They could emerge as a government-controlled alternative, sidelining stablecoins.
Would people trust CBDCs more?
Possibly, but that depends on how much control they're willing to give up.
What might this trend lead to in the coming years?
We could see CBDCs phased in as stablecoins get tougher regulations.
That could reshape the entire financial landscape.
Indeed, and consumers will have to navigate this evolving environment.
What's the key takeaway for everyone?
Stay informed and adapt strategies as these regulations unfold.
Sounds like resilience is the name of the game.
Exactly. Embracing change with caution is vital.
As we wrap up, it's fascinating to see the diverse opinions surrounding the future of cryptocurrencies.
Absolutely. George Tung believes Bitcoin is set for a breakout near $100,000, mainly driven by institutional interest.
And let's not forget the Coin Bureau team's caution regarding stablecoins, highlighting the regulatory pressures that could shake the market.
Right, while Sheldon has his eyes on altcoins, preparing for an imminent rally.
And Rob and Guy point out how U.S. political shifts are affecting Bitcoin's dynamics.
Absolutely. Those dynamics are intertwined with XRP's potential to flip Bitcoin, showcasing the complexity of investor sentiment.
Such intricate factors weave together. Now, before we go, if you found these insights valuable, make sure to like and subscribe.
Stay informed and continue exploring the world of finance with us.
Thanks for watching, and don't miss our other videos for the latest trends and strategies.